And we are live. G'day, I'm Scotty North, and this is Zenium Live, all things money, finance, and property. And today, for our fortnightly update, we're joined with the wonderful, the marvellous, and the non-cardigan wearing today, PJ Patterson. How you going, PJ?
I'm doing great, Scotty. How are you today in sunny, beautiful Queensland?
Mate, it was that cold today in Queensland. I had to put a t-shirt on. It's tragic.
No more just going, full commando running around the property there, huh?
No, mate, no. I had to have nothing else, just a t-shirt and Ugg boots, as I always say. So, look, we're due for our fortnightly. We come on every fortnight, but our market update. And for those that are watching later and listening to our Zenium Live podcast, PJ's on once a month to update us on the financial markets and all those things that he loves looking into and doing for his clients. And that is today. We might actually get a couple of them in July, seeing as we've got 5 weeks, but we'll see how we go. But, mate, welcome to the new financial year. Give us a recap of what you've seen last month and where does it look like it's heading?
Thanks, Scott. Yeah, happy end of financial year and new financial year to you as well. We have, I think, a really interesting time frame period coming up with regard to a lot of global economic events and data. I suppose the first big thing to sort of note is that the COVID situation continues to throw us interesting curveballs, right? So we've had COVID slow down, and now it seems to be firing up again in places like the US and Europe and Australia, for that matter. So it'll be interesting to see this ongoing conversation around COVID and whether they shut the economy down again or do anything around that. Clearly, shutting the economy down is not a good thing, and that's going to be evidenced in the next, I think, couple of months, where we've gone through the period now where we've reopened the economy. So May and June were all about the reopening of the global economy. And there's been a lot of euphoria around that. We've seen some of the data improve. So obviously people are going back to work. We're seeing a little bit of consumer confidence come back in. We're actually seeing a little bit of inflation coming back in as well. So the reopening of the economy has got a lot of people excited. It's got the U.S. stock market particularly excited, but not so much the rest of the global stock markets and economies. But what's really interesting, Scott, and this will be something obviously we'll talk about next month and the following month, is going to be the earnings and the profits and cash flows of businesses, and to see what they're going to report for this period and what they're going to forecast for August, September, October, November, in the back half of this year. My suggestion to you and our listeners and our viewers is that we've had this euphoric period. Stock markets have kind of risen because of that. People are feeling a bit more confident, but the next shoe is going to drop in the next month, probably even 60 days, where we see corporates coming out saying, actually, we're still in pretty dire straits. Cash flows aren't great. We're not returning to pre-COVID levels. Earnings are going to be terrible. And the stock market is going to have to reprice that. So this is the bogeyman that's lurking out there at the moment, which could affect financial markets. And of course, if COVID or some other disease comes out and shocks us again, we could see some serious problems in the global economy and global stock markets.
Yeah, okay. All right. So, I mean, it's still steady as she goes right now, right? So has there been any major information that's been released this month? Like normally every month there's some sort of release. What's come out at the end of June?
Well, we've had GDP figures. Probably one of the biggest numbers we've had come out in the last couple of days is a U.S. employment figure. So what's interesting is we've had some numbers in Australia around employment. They were bad. We had unemployment rising. We had further job loss being reported. But just last night in the U.S., they had a weekly job report, and they were, I think I might have sent you the headline on that, but one of the headlines locally was ASX set to jump higher as Wall Street rises on surprising jobs data. which is interesting how they framed it. And then there was another headline from CNBC that I shot through as well, which was something to do with the June jobs report being really good. The reality, though, is actually far, far, far from those headlines. The jobs report, yes, it is improving slightly, but we still in the US have the highest number of unemployed people ever, like ever. It's in the 40 million mark. The highest unemployment that we've had in Australia in a very, very long time, and a lot of people unemployed. So whilst the mainstream media tries to paint this picture that we are improving and that we've had this bumper jobs report or whatever, the reality is we still have a long way to go, and the data has a long, long way before we get back to a period of economic growth and prosperity.
Okay, so looking at this article here, we've got the Australian stock market set to jump higher as, Wall Street rises. I mean, I probably asked this numerous times, but are we just like followers? Is Australia just a lemming to the US?
I don't think we're a lemming as such, but certainly a lot of the global financial markets are driven by the activity that takes place on the US stock exchange, because look, it's the largest stock market in the world. It drives a lot of the policy and events, and the things that happen there do impact us. I think our media just likes to seize on this because, of course, what they're trying to do today is get our stock market to go higher and to be euphoric and positive. They're a couple of days too late because, we had end of financial year a few days ago. Today's June 3rd. And by the way, happy 4th of July to all of our U.S. listeners. Enjoy that holiday tomorrow. And so anyway, I don't know that we're lemmings, but certainly our markets are driven a lot by what happens in the U.S.
So where to from here? I mean, the only thing certain at the moment seems to be uncertainty. I noticed that we talked about last time, I think Qantas put off quite a few people, well, a substantial amount. What did they offload? 6,000 plus stood down 15,000 out of 29,000 workers. So 21,000 stood down or gone out of 29. But what I really liked was they just put a trading halt on their stock when they were doing announcements. Can't we all just put a trading stock on like the whole economy until we, get through this?
Yeah, that's a tactic they like to do in the stock markets when good or bad news is about to be released. They always put a trading halt on it and then make the announcement and let it go. Yeah, look, we ought to stop our economy. We did stop our economy for the better part of 2 months, and you've seen how that's played out. It's not a good thing. So I don't want a trading halt on the Australian economy or the global economy. We need them open. We need trading to continue. I think the big issue that I'm going to be looking out for, two big issues that I'm going to be looking out for going forward. Number one, as I said a moment ago, inflation looks like it is beginning to creep into everything, right? So we're seeing the cost of commodities rising. We're seeing gold price rising. We're seeing, and this is a function, as we have discussed in previous shows, of the US dollar and the fact that the US dollar is now beginning to fall against global currencies. But we are seeing now more inflationary pressures coming into it. And we're actually entering one of the worst and most dangerous periods in the economic cycle. It's a period that is called stagflation. Stagflation is horrendous because you have rising inflation coupled with stagnant or falling growth or falling GDP. So in other words, the economy
I was confused. I thought stagflation was when they fattened up like deers or something for eating. Like they sort of made the stags fatter but now you're telling me it's something to do with the economy, right? So we probably all know what seriously inflation and deflation, right, up and down, but stagflation, mate, I know you're going into that, but can you make sure you really delve deep into stagflation, because that's something we probably haven't heard much of, but it's quite potentially the worst part that we're going to see, right?
Oh, there's no potential about it. It is the worst part of the economic cycle. It is the most dangerous, and it is the part of the economic cycle where the consumer. So you and I really get screwed in this part of the economic cycle. And by that, I'll elaborate on that, right? So again, when inflation starts to creep in, we see the cost of living basically rises. That's what it means for you and I and our listeners and the average person on the street is the cost of everything starts to go up, but your income isn't going up. GDP and the overall economic prosperity isn't increasing. So you have growth, GDP, incomes, things like that falling, and you have the cost of living rising. It is a terrible spot to be in. So it causes things like deep recessions, which I think we're in anyway. We're in one of those right now. It exacerbates the thing I was talking about earlier, which is corporate profits will continue to fall, cash flows will worsen, personal balance sheets will get weaker, and there will just generally be more hardship out there in the economy, especially for the individual. So it's a very, very dangerous period, and I would expect us to be in it for probably a couple of months at least, hoping that some of the government policies and things that they've been pursuing over the last few months to address COVID will get us out of that economic funk and get something happening around GDP growth and getting our economies going again.
So on that topic of, the government intervention, I mean, historically, have we ever had a government properly get us out of stagflation? I mean, or is it just really the power of the people and the economy transacting as it needs to?
That is a fantastic question. Typically, it is the government, and not specifically the government, but usually the central banks that get us into and out of these predicaments. So a lot of people out there probably think the central banks are good for things, they're saviors and whatnot. But the problem with them is they don't really know how to manage the economy well. They only have kind of one blunt instrument, which is monetary policy. And they have wielded that now for the last 40 years. And unfortunately, every single crisis that comes along seems to be worse and worse, probably because of the stuff that they did in prior crises to address them. So the Federal Reserve, the Reserve Bank of Australia, the central bank in Europe, all of these central bankers are doing everything they can to get the economy firing again. And again, one of their only tools to do that is interest rates. So that's why we've seen interest rates go down to, zero in some cases, or very, very low. And in some cases, actually in Europe, negative interest rates. They're trying to juice the economy. Will it work? Hard to know. We have so much debt sloshing around in the world. One of the problems that central bankers face now is they have to print so much more money, and the government has to put so much more money into the economy via programs or support mechanisms to get a small incremental growth in GDP, that what ends up happening is the government balance sheet blows up big time. This is why the U.S. currently, the Federal Reserve there has something like $6 trillion on their balance sheet. There's, deficits as far as the eye can see. The U.S. probably owes over $200 trillion of liabilities. I mean, it's just never going to end. We will just see the monetary system continue on this path until, something really, really bad happens and we have to give everybody a debt jubilee and forgive our debts. But that's a whole other conversation.
Well, we talked a little bit about that on the last show, and
we did.
And I'm just doing the calculations here on the US government. If it owes $200 trillion, I don't know what they're actually worth, but I mean, their balance sheet actually doesn't make the average Joe Blow look too bad, right?
Yeah, it doesn't. You are correct about that. I mean, I think US GDP is about $4 trillion a year, something like that. It's not massive, right? So if you consider that the deficits they run every year are anywhere between $500 billion to $1 trillion, that just adds to the overall debt level, and that's how they've gotten to such a high figure of debt. And then there's all the unfunded liability, Social Security, and other things that are on their balance sheet that are just a drag and a drain. But this is why the U.S. doesn't want to give up its printing press, because effectively they can just print the money pay for this stuff, which is how money's created, as we discussed last time we were on the air. But again, that's going to end at some point in the future. Who knows when? Probably not in our lifetime, but it will end at some point.
Yeah, no, that's a good point. All right, so in terms of the positive, I say thanks for coming on and making everyone's day with your lovely depressive news. But I know that you're not like that, right? So there's always a silver lining, mate. What's the silver lining that you're talking to your clients about, without giving away all your IP and secrets? But what should people be looking at for the next 3 to 6 months?
Yeah, another great question. And you're right. I mean, I am smiling. I've been very positive for this interview, even though I'm a smiling assassin, that there are a lot of really negative things to look out for out there. The positive is that because of the method that I use in my business called full cycle investing, we are positioning for the inflation trade right now. So we're owners of things like gold, inflation protected bonds. There's an ETF ticker symbol is TIP, TIP. That's an inflation protected bond. Own some of that. I'm sort of looking at some commodity investments, so owning soybeans, corn, lumber, cattle, hogs, things of that nature. There's ETFs to do that. So I pretty much right now want to be a buyer and owner of assets that have an inflation hedge. So commodities typically are that. There you go. There's the tip. So that one is an inflation-protected bond ETF. Fantastic to park cash in and just kind of sit tight while you wait for other opportunities to unfold. I'm also a buyer of technology here. So tech does really well in this inflationary environment. So there are plenty of things you can own. You don't have to sit in cash with a tinfoil hat on your head under your bed every single day until this economy recovers. There's always something to own. But I will say to anybody out there who is an investor, do proceed with caution, because there are definitely little things out there that could blow up in our face.
Yeah, okay. No, that's a good point. So on a more local space, so we've talked a lot about the global market, which I know is one of the things you do. What do you call global macro, micro investing methodology that you macro. Use?
Yep.
That's it. Yep. Closer to home, we've seen this week in Queensland that they've announced that the borders are opening on the 10th of July for everyone except Victorians. So sorry about that if you're from the Victorian state. And in New South Wales, I'm not sure what your rules are in relation to other states coming in, but there's this sort of mishmash of rules still happening in Australia that is probably highly affecting the movement within the states, from within the states as it is now. I went out the other day and went to a shopping centre. Now, it is school holidays in Queensland, and I was struggling to get a car park. I wouldn't say it was quite like Christmas in the shopping centre, but there was people everywhere, and it was almost very difficult to get somewhere to have something to eat if you want to sit down, because obviously they've got the rules about the distancing and stuff like that. But even with that, and the tables moved around, it was very, very busy. Are we seeing a resurgence of holidaying at home and spending at home? Is that going to go on, do you think? Or are people just sort of holding back and waiting to go to Bali again, as most Aussies seem to like to do?
I don't know. I haven't seen any of the consumer numbers for Australia of late, recent ones. I would have to think that with the economy reopened, people being allowed to get back out and begin to do things, we'll obviously see an improvement in retail sales, an improvement in discretionary spending, things of that nature. So I would like to think that there will be an improvement in some of those metrics. How sticky that will be is another question. I don't know whether they will see people changing their behavior back to what they were doing pre-COVID. So this is going to be, again, another thing that will just play out over time, is to see if individuals and families now choose to stay at home, maybe on the Friday night or the Saturday night, and cook at home instead of going out to eat like they used to. And part of that is obviously driven by what you just mentioned. It's still the tight restrictions that many states have on for gatherings and how many people can be present in a location. So the short answer is I don't know. My thought would be we're going to continue to see that whole part of the economy struggle, because you alluded to Qantas earlier. They laid off permanently, I think, another 6,000 people. I don't know what that takes them to, but it's 20,000 plus people they have laid off. We've had Virgin go to the wall. So international travel, even domestic travel, is going to be greatly restricted. We're not going to have students coming back into the country. We have this stoush going on now with the U.S., China, Australia, and China. China's kind of reared its head. I suppose that's the other big thing that I hadn't mentioned earlier that we might need to be on the lookout for is what's China going to be doing now going forward with its political influence and its military influence in our part of the world and with some of our strategic alliances. So again, I think we're entering a very critical period in this economic recovery. I wouldn't go have the pendulum swing straight over to we're back to normal, it's euphoric, I'm happy to just go back to life as I knew it pre-COVID. I think there's caution, and we just need to see what the data says over the next few months.
One of the things, I'm glad you brought up Qantas, because it was going to be my next question as we get towards the end of the show here. But there's obviously a fairly substantial impact. I mean, we talk about Qantas stood down 15,000 and put off 6,000. Okay, so whether those 15,000 are going to find other jobs or come back, I don't know. But that's just one company. That obviously has to have a massive flow-on effect for a whole bunch of other companies that are in the stock market invested. Whether it's it could be cleaning, it could be food preparation, catering, all the stuff that obviously fuel, all those things that go around that are in the economy that support a substantial business like Qantas, that then they put off so many staff and stop operating the way they did. The flow-on effect must be a lot greater than what we just see out of Qantas, right?
Oh, absolutely. You nailed it. I mean, Qantas would be, one of the largest corporates in Australia. They employ a lot of people, and they have operations all over Australia and the world, but certainly all over Australia. And the fact that they are scaling back, they're, cut back on all their flights, international as well as domestic, and laid off so many of their own staff. You could imagine the small businesses that support Qantas and support even small businesses that support other larger businesses that supply to Qantas. There's a massive domino effect that will ripple through the economy. And this is being played out across many different examples of large corporates who are impacted. I mean, even if you just look at the banking sector and the financial sector, they probably are cutting back on contractors and other people that wouldn't be permanently employed by those institutions, but might have been in there on part-time or contract roles. I mean, there's a serious problem out there in the economy at the moment around job creation, around people having their proper wage for the job that they're qualified to do. So that term is called underemployment. So the example that you've used of Qantas is certainly something that's going to be borne out across a number of industries and a number of states in Australia.
Yeah. I think that, as I said, I don't want to be the negative one, but I think we're going to see those flow-on effect. But look, I think it could be a time where people get creative and find new ways for their businesses to support other businesses or repackage themselves or all that sort of stuff.
100%.
But I think it will be still a very interesting time.
Well, if anything, what we are seeing, and one of the positive consequences of all of this COVID thing is the drive now, the real drive and push into the digital economy. So if you think about it, businesses that might have been reluctant in the past to say, well, it's okay for you to work at home, or let's maybe scale back on the office space that we need because I can have more people working from home and we can have rosters where, they might come into the office 2 days a week or something like that. Because in the past, there might have been a reluctance of business to do that. They didn't do it, of course. And now they've been forced to do it. And of course, the economic world hasn't ended. I mean, obviously, businesses have been under stress and there has been stress in the economy, but where they might be stressed, as you've pointed out, they might say, well, actually, we can now get a smaller office premises. Thereby, we're going to save some money. We can hot desk people from home. So they'll be probably more productive because they're happier. They're, in a more, perhaps more relaxed environment. So I think we will see some positive consequences flowing out of this. Whether they will outweigh the negatives as we shift into an economic environment that is now, transitioning from maybe the old traditional world to maybe a new digital economy, I think that's going to be borne out over time. But certainly there will be positive things that'll come out of it.
Yeah. Yeah, look, I agree, Matt. I agree. And I always like to sort of bring the positive back in. One of the figures I was trying to find, I couldn't get a whole heap of data on, was obviously when international travel has an effect on Australia as a country. Now, my gut feel would tell me there's probably more money brought into Australia than we take out. So obviously, instead of holidaying in Australia, Australians would go on holiday in Bali or the US or Europe or whatever. So they'd effectively go and spend their money over there. The flip side is that people would come here and for holidays and spend money here. Now, my gut feel tells me that there's a net benefit to Australia for international travel. I'm finding it difficult to get figures on that, unless you know any. I'm not putting you on the spot here, whether there was any figures on that. But let's say it was, kind of close, which I don't think it would be. But let's just say it was a specific sort of net drop. I guess what I'm saying is it doesn't look to be as substantial as what you might think, because if international travel brought in, say, $10 billion a year, to pick a figure, then we might take out 8 billion. Do you know what I mean? So the net is like the 2 billion. So I'd like to get some figures around that for our next chat, unless you know them now. But I'd also like to say that we're going to see a big change in locals holidaying, as we touched on earlier, and spending here. And I'm seeing that where I am. It is really, really busy for this time of year. And I'd like to know, from your perspective, have you seen any data on, I guess, the trends of being at home or the trends of staying at home with Australia? I know we touched on this earlier, but I mean, in not just gut feel stuff, has there been any data that's released that has said, yes, Australians are doing this and they're still spending their holiday money at home?
The short answer is I do not have any data on that. I think where you would look for data like that would be, for example, jobs in the hospitality sector. Because, of course, let's go back to the beginning of that question. First of all, we know that international travel has been curbed. So we know that we're not going to have the tourism that we have had in the past because of the situation, because people just can't get here. That's the first part of that problem. The second part of it is, okay, so what happens now with Australians? Because we also can't leave. And in not being able to leave, people still want a holiday. What are their choices? Well, they can now take a holiday within Australia. So I think broadly, my view would be that we are going to see more Australians spending more money locally, which I think is good. That'll certainly help the Australian economy to recover. But the flip side is we will not have those billions of dollars of tourist money coming in, because people won't be able to get here. And even if they could, they won't necessarily want to travel because they won't want to get stuck here if something bad happens. And all the other hassles now that go along with travel. So net, I think Australia loses because of all of this. Tourism is certainly a big component of our GDP figures and the money that is brought in. So, mate, I don't know. I don't have any hard numbers. We can certainly dig into that a bit for our next economic update.
Yeah, look, I guess my question was more as the same. My gut feel is that Australia is a bit of the loser on that end. But probably not as much as the headline figures might say. Like, we're losing 10, 20 billion in international travel. What's the net? We've got to net that out because we're not allowed to leave, because once again, we're locked. We've been sent to Australia as the prison island, my friend, and we're all locked here. We're not allowed to go anywhere.
Yeah, that's right. We can only travel within our own borders at the moment, and even then, you can barely do that. So, it's interesting.
That's right. Well, look, at least we're in the sun while we're under our political overlords and enjoying our borders within our border. and trying to get our economy back on track. Look, there's been a lot of news that you brought in today, so thanks for that. And look, a lot of it is, we always know it's going to be negative at this time, but it's always good to have that positive spin on things. And as I said, I'm seeing people out and about spending. I know you are too, and I know that we're seeing a more positive vibe to a lot of people. Some people are still doing it really tough. Let's not beat around the bush. There's a lot of hard yards ahead, but if we can be out and about and we're actually open for business, especially like in Queensland where they're opening up from actually right now, midday today, pretty much a lot of the restrictions are gone. So right at this it's 12:01 right now. So I'm free, mate. We can go and have 100 people at our house if you can fit them in there.
They're all turning up in 15 minutes. They've all got the word, so they're on their way. Look, I think you're right. And one thing I did want to say a moment ago that I got on some other tangent is now is probably one of the best times if you are, if you found yourself retrenched or unemployed or underemployed, to consider starting some sort of business. And, the world is your oyster. This will pass. Global logistics and things like Amazon, they're connecting the world. So now may be one of the best times for you to consider a career change or to start a business. Just obviously be careful about what you do and how you set it up and how you spend money on that. But out of every crisis, I always think there is opportunity. And if your mindset is to look for that, I believe you will find it.
Yeah, I reckon you're right. Look, I've had an idea to start a business that I don't think anyone's done it before. And it's like you can buy things like books and toys and stuff online and it gets shipped straight to you. I reckon it's a niche there that no one's done. What do you reckon?
And I think that's a goer. Let's build a logistics center there in Sunny Coast, and start to fly stuff all over the world. In fact, I hear there's this concept of overnight delivery. Maybe we should explore that. Same day, even.
Who would have thought? Who would have thought? All right. Look, thanks for your time again, PJ. It's always a pleasure to have you on Xenium Live. And for those of you listening and watching later, this is our the first week of July market update with PJ Patterson from Keystone Financial. And we have these at least once a month. And PJ will be on again in a couple of weeks to do another topic. We'll digest a topic and we'll break that down and really get into the nitty gritty like we did last fortnight on how money was created. That's a great one. If you have missed that, look that up on the Xenium Live podcast or on Facebook, YouTube, etc., etc. That's it from me. This is Xenium Live. I'm Scotty North. And until next time, stay well.
Thank you, Scott.